All right, guys, welcome back to another episode on the 2G's Trading channel. And today we are going to talk about how to build your investment portfolio, specifically what stocks to invest into and how I personally choose my stocks. So last year, my portfolio beat the Dow Jones Industrial Average as well as the NASDAQ. And I'm going to share everything today with you, how to choose the stocks for your portfolio and how to invest into those stocks. So very simply, we're going to start off with the very first principle of investing, and that is that you want to invest into companies that have very high traded volume. And what do I mean by that? You do not want to be investing into penny stock companies. You want to be investing into companies that have a very high market cap. Very high volume means that a lot of people are buying and selling that stock, and it's going to be easy for you to get into the stock and to get out of that stock. So that is the very first rule of thumb. Invest into high market cap stocks. So for me, personally, I look at the top 100 traded instruments in the US, specifically Dow Jones, NASDAQ, and after that, I start to shortlist them. So top 100 by market cap, that is the minimum criteria. After I've done that, the next criteria I'm looking at is the price earnings ratio. So it's basically the price divided by the earnings for that stock. So obviously, a very high PE ratio means that the stock is relatively overvalued. It's expensive because the stock price is not correlating to what they are earning as a business. Sometimes you can have a stock with a very high PE ratio due to maybe being a very strong brand. For instance, Apple, there could be a lot of brand loyalty. People love the brand. People are loyal to the brand, and therefore they like the brand. So PE ratio, one of the first. And then what I do is I take the average of the 100 stocks on that list and I calculate the average. That's the first step. After I've calculated the average of the 100, anything that's over the average of that 100, I kick that off the list. And anything that's under the average, I keep on the list. So that is the first metric. Then after I've shortlisted the first round, I do the average again. So I get another average for the PE ratio, and then I get my final group of stocks. So it's basically 2 rounds of elimination just using your PE ratio. After that, I obviously want to invest into stocks that's going to provide me a dividend. Why do I want a dividend from my stock? I want to be using that dividend to reinvest into the stock that's actually paying me the dividend. This is how you can create cash flow from your stock investment. You don't necessarily have to sell your stock to buy more of it. You actually use your dividend that you get on a quarterly or biannual or annual basis, and you reinvest it into that stock. Obviously, your dividend gets paid out equal to the amount of shares that you own. So then what I do is I work out the average dividend payment for each of the shortlisted stocks. Anything that's below the average, I kick out. Anything that's above the average, those ones I keep. Then finally, you're down to your last couple of stocks. Sometimes it's 10 stocks, sometimes it's 20. And again, I need to reiterate this, that I do this every quarter. So it's not something I do once a year. This process, I actually follow Q1, Q2, Q3, Q4. So for each quarter, I create my shortlist. A lot of times, some of the stocks overlap with one another. So a stock that was relevant in Q1 could be relevant in Q2, could be relevant in Q3 and 4. So keep that in mind. Then what I do is, we've done the fundamental on a very high level. We've done the fundamental analysis. Now we move over to the technical perspective. For some of you that don't know, we actually trade live Monday to Friday, London session and New York session. We're actually going to drop a link here in the top left or right corner where you can join us every single day where we trade live with all of our viewers and our subscribers. But nonetheless, going back to the technical perspective, this is where I start using pivots. If you've traded with me, you know that my strategy is heavily based off pivots. purely due to the fact that it's not a lagging indicator. Pivots is a statistical calculation, and your pivot points for the day, for the week, for the month, for the year never change. They cannot change because they are based off past data and the level that prints on your pivots, your resistance one, support one, it cannot change. Therefore, I love to use the pivots. They are statistically relevant. After I've done that, I want to try and get my entry off the yearly pivot level. So please note, go check out on TradingView pivot point standard and go to your weekly time frame. And that pivot line you see is your yearly pivot. That is your equal or your neutral point for the year. So you want to make sure that you get your entry as close as possible to the yearly pivot. How do I enter? This is, again, if you do not know, we've got a Discord community that's free of charge. We actually gave you guys a cheat sheet as to what a bullish entry looks like. And I'm going to show you guys now on the screen. In 3, 2, 1, you're going to see your bullish reversal setups and your bullish continuation setups. So you could look for either one of these setups at the yearly pivot level for price to continue higher. And then the rest is very simple. You buy and you hold, as Warren Buffett will say. It's not about timing the market. It's about time in the market, and enjoy the journey. Again, investing is easy if you forget about the x-axis, but once you start thinking about the x-axis, that's when things become tricky. If you really think about it, we've never, ever not taken out the all-time highs. So every bear market is there to be bought, and every bull market is there to be sold into. Remember this, you do not buy something to hold onto it forever. You are buying something to one day sell it. Always remember that. So don't get married to a stock. Once the stock has done its job and you've seen some significant gains over the months and years, always remember to pay yourself. And if you guys enjoyed this video, please like this video, hit that subscribe button, and also join us live Monday to Friday as we trade on the opening bell and Wall Street sessions. And also please click the link to join our Discord community, and we will see you guys again on the next one.